All right, guys. So welcome everybody. This is our beginners class that we do, where you guys are welcome to ask any questions you want. We can discuss what happened in the market today, what didn't happen, how things played out. We can discuss a lot of things. But I encourage people who are just starting out in anything, whether it's futures, stocks, options, whatever. We can go over those things today. It's just a nice place to do that. So I'll wait for the first question. Go for it. In full disclaimer, I did not trade today, so I apologize. I'll have to I'll take a couple of minutes to go through stuff. If you point me to SPY, I mean SPY is pretty seems like a nice trend that played out. But anything else, I honestly haven't taken a look at charts today. Really? Nobody has any
Hello?
questions? Yeah,
Hey, this is Leo. I got a question.
go for it, man.
I'm I'm trying to. I've been trading a while. Anyway, I'm trying to figure out like when to get in, and I think I can figure out before I get out of trade. So I'm trying to paint an example. Like I was looking at Tesla this morning. So
Okay.
do you so you only enter the trade during the between the resistance and the support levels, or what?
Yep, I definitely, that is what we try. So this is what we call it. We call it that you enter with confirmation and not with
Right,
anticipation, right? So in
right,
the morning, I think Moin put out levels as well for it. And I was looking at it, like if you look at pre-market, like we bounced from here, like this is where we kind of resisted going up, right? Like even though we went down a little bit pre-market, and then this is after like 4 o'clock in the morning, we kind of resisted over here. So this is a nice
right,
day that you can say that we had a intraday, if that's what you want to call it. We had like a resistance point over here, like this 249, you know, or 250 area maybe, or
right,
you could go back a little bit and see that we bounced somewhere over here, like we bounced over here as well, and then we kind of failed to break above this area as well. So for me, this 249.86 is kind of nice because we bounced over here the day before, and we kind of failed to break above this, after that as well. So this area was really nice for me for if we wanted to go up, right? Because we had this as a support, but now we had this as a resistance, right? Because before the market opened, we kind of had this. It tried to break up, then broke down, tried to break up, then break down, and everything. And once market opened, we kind of like flat went down, right? The other thing that you have to identify is the lower level, right, where we were getting support for it, right? And we kind of had
right,
a we kind of, for me, this level over here, the 245-ish level over here, like, this pre-market level, this was really nice, or 244.75, this was really nice because we kind of hopped on it, in pre-market. So this, if you look at it somewhere over here, 244.70 maybe. So, we'll color code it to red, and, we'll color code it to green. And my levels might be a little bit different from what Moin posts. We both have our own thought process of it. But look at this,
right.
right? Like when you look at Tesla, right? Like so we kind of broke through this the minute like market open, and this is a 5 minute chart, right? So you can look at it at a 1 minute. I mean, chart remains the same, I guess. But where is it here? We literally broke like the minute we kind of opened up the market, it just broke down and just kept on going down. Now the one thing that we always say is try not to trade in this like 20-minute area because
Right, right.
we go down and we literally came back up. So if you did not take good profits like very fast, and there should be more levels over here. I don't trade Tesla that much, but you will have support levels, I'm sure, like a 240, which is a psychological number, right?
Hmm.
This kind of makes sense. This 240 area kind of makes sense where it bounced. So if you did not take profits at this level, you immediately bounce back up. But if you look at it during the day, it came perfectly to test this level, right? Like
Yeah.
this pre-market bounce where it bounced over here became a perfect resistance point over here. So when you see this happening, right, you saw it once, it broke down, and you're like, okay, maybe it wants to break up. We'll see if it, because it was still above the 9, it was still above the 20 EMA, it was still above VWAP, right? But what happened is it came and tested it again. Now the second time it tested it again, you also realize that there's very little volume with it as well, right? So this push does not make sense. Like this is minuscule volume over here as well. So now you have lack of volume, failure to break a level, and literally right after that you have breaking of your EMAs as well, right? Like you break the 9 and you break your 20 EMA. So you could have either taken it over here, or you could have taken it over here where it broke down.
So let me ask you this while you talking about that. So when you talking about breaking those EMA, what that mean? If it break it or not?
Break of EMAs means that you're under your EMA or above your EMA, right? Like if it breaks above your EMA, like these lines are you familiar with exponential moving average? And I don't mean it in a bad way. I just mean it in a.
I am. No, yeah. I know what they are, but I ain't figured the part out where you talking about reading the chart yet. I know what they are. I got all those on mine. I'm just asking in like.
Yeah, so these are EMAs end up being dynamic support and resistance level as well, right? Like, so if you see once it broke above over here, it kind of stayed above it for a while, right? And then once there was a little bit more selling enthusiasm, I guess, we kind of broke down over here, and then we broke below VWAP as well, right? So if you did not enter over here, like because you realized that it failed to break over here, it failed to break over here again, you could have probably entered a put over here, right? If you did not enter a put, you could have been like, oh, I want to be a little bit more safe. Let's break below the acute EMAs, which are the 9 and the 20 EMAs on the 1 minute, because we're already under the 60 EMA, right? Like, so we tried breaking above, hit the level, hit the 60 EMA as well, right? So the 60 EMA was constantly acting as a resistance as well. And that's a dynamic resistance as well, right? So you realize, oh, didn't break over here, now breaking below the EMAs. You could have taken a put over here, and then you could have just ridden it down. Yes, there might have been a little bit of a nervous part where, you went down over here, and if you didn't take profit, we pushed over here. But look at it, we came over to VWAP, we got a slight push, and then literally got a massive rejection down again.
Right.
Same thing again, right? Massive rejection down again. Now, if your entry point was over here, you are still well above, your price is still you should still be green, let me put it this way, right?
Right.
After this rejection, we just went down, right? Like we are below all EMAs, right? Now, you should definitely, now the one place that I would look to take profit is, the low of the day, right? We had this low of the day, which was at 239 or 240. I would have definitely taken profit in this range, right? Because I was like, maybe it goes down from over here. So this is where I would have taken profit. And then if it kept on going down more, I would have taken profit like, somewhere on this huge red candle, because you have to remember, right? Like implied volatility helps the price. The more the drastic the price decrease, the more the price increases, right? Once the price gets static, you lose that momentum, you lose that money then. So I would have definitely, on this huge 2 candles, I would have definitely tried to take some. And then, if I had a contract left, I would have stopped myself out over here. When it started, if you look over here, started breaking right above the 9 EMA over here. Then it broke above the 20 EMA over here. And then it broke the pre-market lows over here, right? It started breaking those. So, you could have taken profit over here. This part, I was looking at it before as well. If you were ballsy enough, you could have held on to it, saying that, your entry was somewhere over here. That is fine, because again, we're rejecting off the 60 EMA. I'm a little bit more cautious, if that's the word for it, or you can call me a chicken. When this would have happened, I would have gone out, because, when this happens, your premiums drop massively, especially after a run like this, right? You're going to lose a lot of money. What you could do, what I like doing is I like taking the money over here, and if I have a contract left and if I didn't come out, I will just average up again over here in this range, thinking that if this breaks, if this 60 EMA breaks, because it has been respecting the 60 EMA for the whole day, right? If this 60 EMA broke, I would have taken a small loss and I would have said bye-bye. And even on that one contract, I might still have been positive, so I might have come out net positive out, maybe a little net negative. You would have made a lot of money over here already. So if you were ballsy enough to add a contract over here, you could have again taken that right down again over here. So, and done that. But I like to trade with confirmations, and I try to trade with momentum, right? Because that's where the money is, right? Like this chop zone, unless you got like absolutely at the top and you got out absolutely at the bottom, that chop will not give you a lot of money. Like if you got like anywhere in the middle, unfortunately, over here,
Right.
over here, over here, that chop doesn't give you that much money. So this drop is what these two drops were the ones that you were looking for. This one
Right.
drop over here and this one drop over here. Does that make
Okay.
sense?
I sure appreciate it.
Okay. Yeah, and I'm sure if I can go on the day level, probably there'll be a support level like somewhere over here on this. Um, I can do it probably right now. Let's see, where are we? In this area, okay. So let's see. Not really, not that much. Let's see. Yeah, I mean, kind of bounced nicely at most places. I'm sure there's a level that I'm missing. Could probably go on it. You could probably use this as a nice level over here because this was yesterday's lows. You could have used this
Right.
easily as a level over here. And yeah, your chart kind of played out really nicely, right? The support levels are
Right.
like elastic bands, right? Nothing bounces perfectly. Yes, some of these like bounce really nicely over here. This bounced really nicely over here, but they're not perfect. But yeah, it played out fairly decently.
Okay.
Does that make sense?
All right. It do. I appreciate you.
Okay, yeah, you're welcome,
Yeah,
bro.
yeah.
I have a question.
Go for it.
Do you start your options on the 1 minute or the 5 minute?
I do it on the 1 minute. Absolutely.
Okay.
The 5 minute, I might keep looking at it for confirmation. Like if I'm like, I'll show you why, right? Because of this. If you look at this 5 minute chart, this is nice to have that, you kind of hung around over here, but the money that you got, a lot of it, I'll show you the 1 minute where I would have entered, right? Like this is where I would have entered. So you see how this double top played out, right? I don't know if it's a double top, but you had this area where you kind of bounced over here once, twice, came back down, tried to retest it again once, twice on the 60 EMA. Now this entire 1, 2, 3, 4, 5, 6 maybe, this would have entire thing would have been one candle. If I was looking for like a clean break, like if there was like a big trend that was happening and if I was trying to look for like a really good solid break, I might wait for the 5 minute, but this kind of gives me like a lot of confidence because you have your 60 EMA, you have this failure to break multiple times. This is where I would have taken the trade. Now, if you go back onto 958 on the 5 minute, it would not be such a nice confirmation. Let me put it this way. Oops. Right, so you look over here. This was your 955 candle that was pushing up. This was your 10 o'clock candle, right? Like this is where I would have already entered. Like if I was on this chart, I would have been like, oh, it's still above it's still trying to close above the 9 EMA, maybe, maybe not, and I would have missed this whole candle down. This is where you would have made a lot of money, right? Because you went down from 243 down to 241. That's a nice $2 move in addition to obviously what else happened after that. But this was like the ideal entry to do it. Like this candle was the ideal entry to do it. So you can definitely watch a 5 minute, but my entry is definitely on the 1 minute.
Okay.
It just gives you just have a little bit more information, more and a more accurate representation of what's happening. 5 minutes, you want to take a look at it just to confirm that, like you're not near, like you want to take a look, make sure that your 200 EMA is not sitting right over here, right? Because it can come down, but it can bounce hard off of it as well. So you kind of want to confirm both things when you're doing it. That's why you try to keep both charts on, that that there's nothing big happening that you're missing on a bigger time frame.
All right. The reason why I asked is because the 1 minute changed so quickly that.
It does. It does. And it takes time. So that's the only thing that I say, right? It takes time to get this right, right? Like this part of it, it's easy. I'm just being honest with you. This is really honest when somebody says, "Oh, it was so nice. They were like it failed to break it one, two, three, four times, and this was like the perfect entry to do it." So it's easy to say that, right? Especially post hoc. When you're looking at it, hindsight's 2020, right? That's why I said, like if this was the perfect entry was over here, when this got rejected a fourth time, you could have entered over here. This was perfect. But if I were there, I would have probably taken it over here where it started breaking below the 9 and the 20 EMA, right? So this was a nice place to take it because you saw that immediately VWAP was over here. You could have, had this move over here. And every time, your VWAP was right there as a pretty solid dynamic resistance point, right? Every time it broke up, it came down, broke up, came down. You entered somewhere over here, so you were always above it. And hopefully you were always green above it, right? The other thing was that, your 60 EMA was coming down, so you had an exit, right? If it would have broken through, and even if you did not take an exit over here, your 60 EMA, which was respecting for the rest of the entire day, like even pre-market over here, if you look at it, once it broke below, it never really came back above the 60 EMA over here. You could have been like, oh yeah, I can make a small loss, maybe, 5, 10%, whatever it is, right? And I could have just exited over here, either over here or either over here, and been like done, right? That's fine. But you realize that it tested it once, tested it twice, and then started to come back down. And if you look at it with the same thing on the 5 minute, we kind of came over here. We tested VWAP, right? Your 5 minute was also good confirmation, right? It never really, that makes you a little bit nervous, but this one does not, right? This one shows you that we're still clearly below VWAP, and it just trended down after that. So, and then we kind of stayed, to stay in the trade, like we were talking about here on the 1 minute, this got me nervous. And I'm a chicken, I'm just being honest with you about it. I'm a chicken. I don't like staying too long in a trade. Like this one would have freaked me out at 10:45. But if you look at the 5 minute chart on it, this is 10:45, right? 10:45. Yeah, this is 10:45, 10:50. We never broke above the 9 EMA on the 5 minute. So this would have been a very nice thing to see, right? Like if you entered over here on the 1 minute, this would have been a really nice thing to not make you panic that, hey, we're still below the 9 EMA, we're not coming up, not coming up, not coming up, not coming up at all. So this was like a really nice thing to have, and we just kept going through levels. Like we went from 243 if that was your entry. If you went a little bit below, if you came at flat 243, you went down all the way to 235 at least. Even if you took levels, like if you took your last contract over here to 235, so you got an $8 move, which is pretty decent, right? So yeah, so that's where the 5 minute helps me. It helps me calm down. Hey, I don't need to run away, or I don't need to be scared. I just feel that this, in options more especially, that this part destroys premiums quite a bit. You might have gotten the same exit over here that you got over here in terms of your premium price. Unless you had like a 0 day something, which was very close to the money. Like if you had a 234 maybe, right? Then you would have kind of gotten the same price. But if you were far out of the money, like I do that sometimes, just because it's less expensive, you might have gotten the same price over here that you did over here. So those are things that you kind of have to think sometimes, depending on your own strategy.
Do you use the BRC with the EMAs or just the levels?
It depends. So BRC is great when it is playing out that way, right? So if you look at the 1 minute, right? When it works out beautifully, right? For the most part, when it works out beautifully. So if you look at it over here, we never really broke. Like this is what I was talking about, right? If it would have broken this level, if this would have broken our lower level, I would have been very happy to see this, that it broke. Maybe it would have gotten rejected of the 200 EMA and would have retested and come down, would have given us a confirmation, but it never really did that for me. It just like literally touched it perfectly over here, and then just got rejected down completely. So I love to use BRC if we can, but you have to kind of see what's happening as well at the same time.
No, I'm asking, do you only use it at the levels, or do you use it off of the EMAs also?
Mostly of the levels.
Okay, that's what. Okay.
Yeah. Sorry about that. I misunderstood your question.
Thank you.
You're welcome. Anyone else?
Hey, listen, I have a question.
Sure, man.
So how do you know if it is a BRC day or get out quick day? Like
The crystal ball that I have on my computer tells me usually. No, it's like you have to see the price action, right? That's why you need like a couple of things. You just have to kind of look at what's happening, kind of a day, and go from there pretty much, right? BRC is just simply it's simply the same thing as when you trade with levels, right? It's just an extra level of confirmation. I like it especially when you're going up, right? You break a level, like you go up, and then you come back down a little bit. You sit around the same level, and then you kind of bounce back, and then you kind of like keep going upwards, right? So I like it that way. It's really nice to see that, and it works the other way around as well. But you have to combine it with whatever else you're seeing as well, right? Sometimes you just might not see BRC, right? Like sometimes you just might butter through levels, like cut through levels, and just go. Like it might just not happen.
Okay. So I think it just comes with experience. The more charts you look at, the more.
Yep. The more charts you look at, yeah. So you know what I recommend usually? Dweeple has if you can, and I'm sure TradingView has this too. If you are in a trade, even if you're not in a trade, if you like a chart, like for example Tesla, they have this feature where you can auto play this, like the whole chart for the whole day. So you can just in like fast forward or whatever. So you can literally draw levels and play out the day again and see how it went. And it really helps me understand some of my plays, and why did I exit it before, or why did I enter before, and how I could have stayed calm, what left, if I could have looked at a different time frame, right? Yeah, I could have looked at it, for example, if I would have looked at a 30-minute time frame, what would that would have told me, compared to something else, So sometimes it really helps you to look at it again and again and again, like especially when you think you're making a mistake. So yeah, the more charts you look at, the better it gets, seriously.
Okay, yeah. That sounds good. Because the problem with me is I try to be calm when the price is not going in my favor, and I like sell early and have my losers for long. So I think I need to work on that by looking at chart more and go from there.
Do you want to go over something? Is there a trade that you want to go over?
No. There was one in SPY like a few days back.
Okay.
Maybe if I get one, I hope or not, I'll let you know and we can go over it.
Sure. Yeah, that's fine. Sometimes it's just like a second set of eyes can look at it with you and tell you like what I would have done. Let me put it this way. And again, it's easy to post say it like this is what I would have done, but that's what we try to. And I still make errors in my execution, right? Like I post this on my channel all the time. There are things that I post like there are things that I get like at really nice price, and I sell it at 20%, and then it runs whatever 120%, whatever, and you go like where did I make the mistake, kind of sort of, and you realize, oh, you looked at volume, but you did not realize that those volume bars, like those volume was really nice, you were happy with it, right? But you did not realize that the volume was not, it was a million every 5 minutes, and it wasn't like 50,000 or 80,000 that happens with like a typical penny stock, for example, right? So there's like so much more volume. So I just look at, when I look at volume, I just look at these bars, right? But sometimes I really end up counting what these bars are showing as well, right? Because it shows it over here, it shows you the volume for each bar. So sometimes you realize I made those mistakes where I go like, oh, we're getting good volume, right? It's gonna go up and whatever, and I'm gonna make like 20, 30, 40% whatever, and be really happy about it. And then I realized, oh wow, this was like a squeeze where like everybody kind of poured into it, right? Like it was like the top volume thing for something of that sort, and I never really noticed it. I just noticed that in relative, this had like really nice volume, and that is all I did. So it's something, you make those mistakes and you kind of learn from it, and you live to trade another day, I guess.
Yep, may make sense. Thank you.
You're welcome.
Hey, IntheZone?
Mm-hmm.
Can you hear me?
I do.
Hello?
Jimmy, right?
Yeah, you can hear me, right? I know I had some microphone issues.
No, you're fine. I can listen to you.
Hey, what does BRC means? Like a breakout? What is BRC you guys are talking about?
Break, retest, and confirm. So sometimes,
that's it. Okay.
yeah, and Joe really does a really nice class on this, right? Like let me see if SPY did that today. Where's my SPY chart? My goodness, SPX. Where'd my SPY chart go? Really? Oh, there it is. Like for example, over here, right? Maybe not perfectly, but like for example, when SPY broke out over here, right? SPY broke out, went up, came back down a little bit, and then continued going up as well. So that, and we see that a lot with penny stocks as well, right? Like if something breaks out, it retests that level. It's going to break out, retest that level back, and then continue to go back up. So it's called a break. Like for example, if it's breaking a level, breaks, retests, and then gives a very nice confirmation candle again, and then the momentum keeps on going up.
Okay. Yep.
Where would you set your stop loss on that break?
On this one, like on SPY?
Yes, right there on that like that hammer candle.
Oh.
When it actually broke.
So let's see where SPY levels were. So I didn't trade SPY this morning. Let's see where if we can pull up some SPYs. I don't even know if I had like levels. Where it is. 563. Where did I post my levels? 563, 37. The pre-market, right? Oh wow, 2 levels. Okay. So let's see. I would put my pre-market level over here. Clearly too much stuff on the chart. So this is my breakout, right to the top, and oh wow, this is like a lot of stuff. So my breakdown would be somewhere around this 562-ish, maybe somewhere over here. So I would put my level over here for going below, right? If we fall below, because this was pre-market supported, we kind of struggled over here, then came back down, then struggled over here. So I feel like that's a nice place for it to go down, right? If it went down, and then we'll put this as red, right? So if I would have taken this trade, right, this is what I was looking at. Look at how nicely it got supported. Let me just make this a little bit bigger if I can. Yeah. Look at how nicely this level got supported. Like yes, so this is the difficult part, right, to trade, right? This is the difficult part because this is the initial push and a lot of chop over here, right? But what I would have looked for is that, hey, like after this chop kind of ended, we came down, tested this level. Now you could have, maybe I would have taken this trade up. I honestly don't know because we're still in this chop zone. This is the one problem that I see. We're kind of still in this chop zone. So it's possible to take this trade. My stop loss would have definitely been, again, this level either, or like a little bit above. Like especially if I would have taken this trade right over here, and if I became positive, I would have placed my stop loss right before like at break even or something of that sort. Because once a trade turns green, I could lose some of the profits, but I'm never going to lose all my money ever. I would be like, I will enter the trade again. I will enter the trade 3 times if, like my levels tell me, or, if I have good confirmation, I will enter it 3 times. Because sometimes there's just chop happening, right? So I will enter it a second time, but I will not lose money on it because you never know that if this broke down over here, how low this will go. Yes, I had this level drawn up. I had this line drawn up over here really nicely, this trend line, which was from pre-market, right? Which was going above and it bounced over here perfectly. But this is just a line. It can fail, right? Nobody knows whether this is going to hold up or not. It held up. That's great. But, my confirmation to take the trade was this level, right? So my confirmation to exit the trade as well, like if this is breaking, that means, there is some problem. We tested it once over here, twice, thrice, 4 times, right? So this held up really well. And if it bounced from here and if it's coming back down and breaking, that means there's a decent amount of selling pressure. So I would have exited the trade right here. I would have been like, I am at break even or like $1 above break even or whatever. I would have exited again. And then once it bounced over here and came back up over here again, I might have entered the trade again, maybe. But what would have happened is this break back down would have made me cautious. But like, you can watch it a little bit, see if we can break this chop area down. And if it breaks it, that's fine. The second thing is we broke above VWAP and then broke immediately back down. So I'm looking for the same thing over here again. That, we broke above and then broke back down again. So this would have kind of deterred me over here. What would have really helped me is when we went over here, got supported again, and then broke above VWAP and then stayed above VWAP over here, right? Then we kind of exited this zone where we got rejected twice. I would have entered over here at 565. Like after we cleared this zone, I would have entered at 565. I would have taken my first profit maybe somewhere around over here because this was this chop zone over here, like the top of the rejection zone. So I would have taken my first profit over here, like if I had multiple contracts, at 566. And then I would have seen that, hey, we are well above the 9 EMA constantly over here. Now, I don't pretend that, I take profits over here. Unfortunately, I don't have that much balls, right? I will probably take a good amount of profit at this level, 568. Whenever I see like this big push happening, I say this all the time. These big, huge candles is where you make the money. Because especially if you're on a 0-day contract, this huge candles or this huge push with this volume is what's really going to push up your implied volatility and going to increase your price. So I would have definitely taken a contract or two over here out. Like if I had 3, I would have taken my second out over here. And the third one, I would have been like, whenever this 9 EMA breaks, I'm going to take it, which probably would have been over here. Would have been over here, which, funnily enough, is pretty close to this over here as well. So, it's easy to say it post hoc, but, this is how I would have played it, especially after being smacked down over here once. I would have really waited for a good confirmation for it to go above VWAP, stayed above VWAP, stayed above all the EMAs, and would have entered over here to do it.
Okay.
Does that make sense?
Yeah, it made perfect good sense.
Okay.
Especially like looking back left, the 2 tests on the VWAP, and the first 2 tests came back to the downside, and that third test went to the upside. So yeah, that right there was a good indication it was going to keep going up. So
yeah,
that's pretty good that you pointed that out.
Yeah, it's I've gotten smacked down multiple times on things like these where I have like good, you have your levels, and this is your own bias, right? Like these levels are your own bias because you think that this is where price is going to turn or price is going to get supported, right? So you have to go in with that mindset that, hey, this is my bias, right? If it is breaking down, I am wrong probably. Or, something is happening that I didn't read right. What I probably wouldn't have read right is that, we got rejected off VWAP, right? So this wasn't a horrible level. To be honest, it turned out pretty decent. But, when this happens, it shatters your confidence a little bit, right? So the next time when you go in, you become a little bit more cautious. You don't want to make this exact same mistake, 30 minutes later, the same candle pattern kind of coming through again, right? So the second time that you entered, you could have either really watched it and, if you really entered over here, you could have next time been like, oh yeah, now I'm not going to make the same mistake of coming all the way down. If it's breaking you up, I'm going to, take profit over here, and, be done. Or you could have been like, I'm going to wait for it to clear this level, really nicely so that, we don't get rejected off the same area. And that would have come, much later over here.
Okay. Yeah, that's the hardest part when I'm trading and I'm live is just actually seeing it. I mean, you see it, but
Yeah.
when you're in that moment, it's like, when something like that happens, like especially in chop, you
Yeah.
kind of like, oh shoot, I'm just waiting, I'm waiting for you to miss, you to miss the runner. And,
Yeah.
So
You kind of have to keep looking back at the chart, right? Like keep looking back at the chart as to what happened. What we do is we're kind of anticipating what's going to happen in front, but we never look back or this was my problem at least, right? I did not used to go and look back as what's already happened on the chart, right? Once it happened, it went out of my brain. I never really paid attention to it again. I was like, whatever. So I never paid attention to this part again. So what I try doing constantly now is I keep going back and saying, oh, where did it reject? Where did it reject? Where did it bounce off? What happened? So that I could take my profits, I could do my stop loss, all of those things that way. And a stop loss always in the green, always. Especially if you had a good entry and you became positive, your stop loss should always be green. You can always enter again, dude. You paid like 3 cents or whatever for a contract on Robinhood or whatever cents you pay on a contract, right? You can enter again. It doesn't really matter. So never hesitate in exiting a trade green and jumping in again. That is perfectly fine. Your first job is to save your money, right? Your first job is not to make money. Your first job is to save your money. Your second job is to make money on top of it.
Okay.
Hey, IntheZone.
Hey, man.
Man, it's funny you're talking about this. Smooth had a live on this trade, and we watched. Like, I took it short. We were pointing that first, or we were pointing on the red candles, probably like halfway through the day. Where it went below the green line. I took a short there at the top because I was expecting it to pull back.
Okay.
Now, I was in 50, 60, 70% profit, and I didn't take it.
Okay.
Then it went back up, and I was expecting it to happen again. And it never happened, so I ended up just, getting rid of it for, the same price. But it's just funny you talked about this, because we were expecting a pullback from where at the end of the day, where it just kept going up and up and up.
Yeah.
Without coming down to consolidate.
Yeah.
I mean, and that's, oh, there it is. Okay, right after hours. I see it now. It started to.
Yeah, it did.
But
It dropped pretty hard.
Did it get to 567? Yeah, exactly. Okay, good.
Yeah.
That's what we were waiting for. And I had a contract at the end of the day and had to get out because this move was just a little bit late.
Yeah. So you have to. So this is what the other thing is, right? Always options is very nice, and people show you their really nice wins of 200%, 400%, 800%, whatever, right? 30-40% on a contract is really nice, dude. I'll be really honest with you. Like, yes, I post my 100% wins, but I post those because those look really nice. I'm being really honest with you because those look really nice, right? But those constant 40% wins, 30% wins is what makes your portfolio. Those 100% generally do not come on same day contracts. Like the ones that you are day trading, those don't come on.
Yeah.
Yes, if you got, for example, an NVIDIA contract right now for a month out, like you got 100 and, I don't know, whatever NVIDIA's price is today. What is NVIDIA's price today? Let's see.
I was on file, right?
Yeah, so NVIDIA's price, for example, right now is 119, right? For example, if you got a 121, we already touched 123, right? Like if you got a 121 price, for example, or 125 or 124, right, for a month out.
Right.
And it goes up to 130 or 140, whatever, you'll have like an 800% gain. Those are normal, right? Because, you get it when you're swinging contracts and things work out nice, that's perfect.
Okay.
But for day trading contracts, 30-40% always take profits on it. Don't
Okay.
don't come into this thing of people saying that, oh, they're making 100%. There are a lot of people, and I'm part of some of these discords that, who trade SPX, right? Really nice. But they buy
Yeah.
like 20 contracts of an X
Right.
price, 20 contracts of another price, 20 contracts of another price, 20 contracts of another price. You'll realize they have like a couple of $1,000 at least, like, 10, 15, $20,000 every time they're going,
Right.
right? And it's nice. Some of those play out really nicely, but they also take $5,000 losses as well.
Yes.
And they're okay with that, right? So you have to kind of be, you have to decide where you want to be. What line do you have to be on? So in my
Yeah.
book, once you have this is how I look at it, right? If my size and my risk does not allow me to take a loss, one, especially if I'm already in the green. So
Yeah.
I try to take it at like 30, 40% for sure. Like 25%, I will take some profit. 40%, I will take really good profit. 80%, I'm ecstatic actually at that point, especially on a day trade contract. I'm like loving it at that point in time. So
Yeah.
be very disciplined about taking profit.
It's. Do you know if you can take if you can use TradingView with Robinhood?
I don't know. I don't use
Okay.
TradingView, yeah, unfortunately.
Okay.
Big nice recovery. All right, guys. Any other questions, guys?
Do you think the market's in a reversal right now? Oh, I'm sorry. Go ahead. I already asked something.
So I have a question. When you're doing the contracts that are 30 days out, what are you looking for in those type contracts?
Like in the contract itself or the stock itself? Which one of the two?
The contract itself.
Oh, so
How do you know how to pick the best one, I guess, for those far out?
So for me, the company matters more than the contract itself, right? So the things that I look for is one, you don't want to be too far out of the money because especially if you're looking at mega caps or whatever, they don't move 25%, right? They're going to move maybe 5%, 8% even if they're doing a very nice recovery. Nvidia is crazy. Like, move from if somebody got it at 100, it has moved really nicely up to 150. But what you're looking for is the company itself, right? And what I look for is like a 5 to 10% move, and that's the price that I'm aiming for when I swing contracts.
So you're looking at an individual stock, not like SPY.
No, I wouldn't swing SPY options. I do not like doing that because it just doesn't move that much. SPY moves 8% in a year, right? Nvidia can move 10% in a month, easy. So that's why individual stocks doing that is much easier. People definitely do leaps on SPY as well, right? Because it's definitely more stable, it's more liquidity, you can go in and out. But for me, the return isn't there on it. You can definitely make 100% or something else, whatever on it, on leap contracts as well, for sure. But you need a lot more money for those contracts. For like compared to Tesla or Nvidia or what else? Even something like Amazon, moves really nicely. Netflix moves really nicely. So these are things that can move a lot more in a lot shorter time, so you can get a better return out of it.
Mhm.
That makes sense?
Yes, that's the thing when they talk about buying contracts 1 week or a month out. They're so expensive. Unless you have a huge portfolio, it's hard to do those contracts.
Yep, SPY is very difficult to do that. Like buying those is really out of them, out of their big time on your hand is very difficult.
Yeah.
Marilyn, there are a couple of nice videos that we have recorded on it, but in essence, your capital dictates a certain amount of how much you should be what contracts you can get. If you have a decent size portfolio that you can allocate it to it, I would try to be, like, especially when you're trading SPY, right? I would try to be $1 or $2 maybe um, out of the money, I guess. Like if you're buying a call, and if we're at 520, I would buy a 521 or a 522 because the chances of you moving into the money is really nice, right? And as far as time duration goes, Smooth puts this very nicely. If I'm buying it before 11 o'clock, I would buy it for the same day because generally what I'm trying to see is a move happening a move is happening. I'm getting a confirmation and I'm playing the move that's coming ahead, right? Which usually happens in a couple of minutes, maybe an hour. That's about it. After that, the degradation is so much, theta is so much that same day contracts start to lose a lot of their value, right? So if it's after 12
Right.
o'clock, I would aim for the next day. Even though I'm selling it today only, even though I'm going to sell it like in an hour or maybe hour and a half, I would still buy the next day's contract just so that theta doesn't kill me that fast. And then stay the same with the money contract.
Say the same word. I didn't hear you.
Sorry, I didn't understand what you were saying.
I didn't hear what you said. Say the word.
Oh, so yeah, I would like $1 or $2 out of the money. Like, if SPY is, for example, if you're getting a SPY contract and SPY is at 520 and you're expecting a move up, I would get a 521 or a $522 call. If you are buying it before 11 or 12 o'clock, I would buy it for the same day. That's how I do it. If I buy it after 12 o'clock, like if I'm seeing a move at 2 o'clock and, SPY is going down, I would, for example, or going up, whatever, I would buy the next day's contract.
Okay.
Do you do any straddles?
I do not. No, I wish I was that good, but I don't. I'm not even close. I just feel straddle is based on you don't know which direction it's going to move. So, I try to trade with confirmations, and once you have a confirmation of what side you're moving at, it's easy to either get a call or a put.
Okay.
Does that make sense to you?
Yeah, but what I was thinking is that if you know something's going to move a direction, any direction,
yeah,
it doesn't matter which direction. If you get a straddle on it, it seems like the more in the money you go, your range of, as long as it moves, 5%, or has a decent move on the day, it seems like you're going to make money, even if you don't get out of your other contract. Your opposite one.
Yes and no, I guess, because it also depends on which contract had how much premium on it, right? You have to then compare the implied volatility on each one of them, the theta on each one of them, the vega on each one of them. Like if you can go into that detail and find out like how much dollar amount would affect each side of it, depending on when it's happening, right? If you can look up that much into it, then that's fine. So, people do that with earnings, right? Like, because earnings can give you a 300-400% direction, and only 100% loss. So, yeah, straddles can work out that way. And that is, again, the same thing, right? That's not a confirmation like earnings. Earnings is a gamble. So if you're doing that where you're not sure of the direction, then sure, absolutely do that.
That's exactly what made me think of it, was the earnings thing and how you don't know which direction, but you know it's going to have a huge move.
Yeah, but you also need to realize that there's a lot of crush on the side that it's moving.
Right, there's a lot more to cost to borrow up a lot.
Yeah, so before the earnings, everything's like really high and everything, and after earning, it's gonna, unless it moves like a dramatic move and you had close enough, in the money contracts, that implied volatility just crushes you. So you take that 100% loss whatever on a put, but you also don't get that huge 100, 200, 300% going up unless you are really close to the money or whatever. So that's why you have to be very careful on that stage.
Okay. Thank you so much.
You're welcome, man. Right, we have time for one last question. Somebody wanted to ask me about futures. I feel like before we started, somebody had posted on the general forum. The real Salem? Are you here?
If no one else has any questions, I have another one.
Go for it, man. I don't think anybody does.
Do you think that the market is reversing? Is there enough confirmation the last 2 days going up or whatever? Is that enough confirmation for a reversal in the market?
I'll be really honest. No, I don't think so.
You think it's just like a correction type? There's no opposite direction.
I think we're in a dead cat bounce kind of sort of situation. Look, we're still below the 200 EMA, right? We're hanging around this. We came up to it, got rejected off, like went above it, and then got completely rejected down from it, right? So we're at a very nice.
Well, what time frame is that?
Huh?
Is that the daily?
That's the daily, yeah.
Okay.
So yeah, we have the daily 200 EMA right here, and we got rejected. Like it came over here, went up really nicely, and then got slapped all the way back down. So I think we did a kind of a BRC where we kind of came back down, broke it, we're retesting it. You know, if it breaks above it and it keeps going up, then sure, you know, really nice. That would be really great. But I do have a feeling that we're going to do a BRC where we broke it, retested it, and we're going to confirm go down again. I feel like for a little bit more because we don't have any. There's nothing that has changed particularly, right? Like what has changed from
news, right? From just sentiment, market sentiment.
Yeah, there's no catalyst that is there. We haven't like done like hugely well on unemployment, or you know, we haven't done like huge on inflation or anything else for that matter, right? Like so this whole sentiment which was bad like hasn't really changed. You know, this might be like a dead cat bounce. This could just be a retesting of it or something of that sort. So
well, isn't there some big news tomorrow? Could it be like a sell the rumor, buy the rumor, sell the news type of deal where they're having the market adjust before the news actually comes out?
Let's see what tomorrow is. I don't remember.
I think Powell talks.
Tomorrow's CPI month over. Oh, that's Canadian CPI. Okay. I was like, what? I was like, our CPI doesn't come in. So we have building permits, house starts, import prices.
And Powell.
And then 9:15 capitalization. And Powell speaks as well for tomorrow.
2:30. Yeah.
I think Powell is Wednesday, right?
I think it's Wednesday. Powell usually speaks on Wednesday. Yeah. FOMC 2 o'clock on Wednesday. That is correct.
Oh, okay. Okay.
Yeah. So yeah, if Powell says something that they are ready to stimulate the economy or something else, if something huge changes, then yes, I would absolutely look forward to it, right? But right now for me, this does not constitute a recovery for me. This does not give me a confidence that hey, we are breaking out we're going to do a V-shaped recovery. I feel like we're coming up. We're going to get a little bit of crap, and we're going to come back down, maybe back to this 550 level. Maybe below. I don't know. Again, I could be totally wrong. Tomorrow it might just blast through another 1%, 2%, or whatever. And with FOMC, it might blast up even more. I'd be really happy. My long-term portfolio would be really happy. My wife's 401k would be really happy as well because they've got annihilated, obviously. So my youngest.
Either way, it should be a good play because I mean the test and the retest and break is usually a pretty good strategy, either direction.
Yeah. So we'll see what happens tomorrow, right? How it opens tomorrow, how it goes. We'll see how it goes, and then go from there. Again, right? Like don't trade on confirmations. Oh, don't trade on anticipation, like what's going to happen from here.
Right.
Just trade on confirmations for it. The only anticipation that I did was I funded my youngest daughter's 5 to 9 plan at 550. The day it touched 550, I deposited money into it. That is all I did. And I did half what I was supposed to do as my first starting lump sum for her. That is what I did over here.
Okay.
And the reason why I did half was, I expect that we will come down and maybe go even lower, maybe. But I
You
feel
want
like
to size in right.
huh?
And you want to size in right.
Yeah, exactly. But if it goes lower, I'll do it even more, and
Right.
she'll get a good.
You can do the same amount and get more for it even.
Yeah. So that is what I did. Like I've been waiting for this like entire January, February, March for this to happen. So my wife was really upset at me that we did not start like a couple of months back. And then I said to her, like I showed her, I became petty and said
Right.
no when this happened to her, which was really good feeling. But after I got a shoe from her, it didn't feel so good.
Right.
But it's nice. It worked out really nice over here. But hopefully she gets a good roll. So that's this is my only anticipation that I did over here. Let me tell you this way.
Okay. One more quick question is how much weight do you put on pre-market moves? Because it seems like a lot of times pre-market it'll move up, and then as soon as the market opens, it'll take a nice dive. And I know people say don't trade in the first 30 minutes or something, but I mean I'm just wondering how much weight you put on pre-market moves and all that.
I tried to see how much those pre-market worked out previously as well. So look at this, right? Like this level pre-market also corresponded with this one yesterday at closing, right? So you it's not just pre-market that you're looking at. You realize why that pre-market level was important. You can go back, more probably and take a look at it. Like we got rejection, like with this candle over here in this pre-market area over here as well. And probably if you go back, you could have seen more as well. I'm sure. Like look at this.
Yeah, like that's the perfect one that you were on, back one.
Yeah.
The other
we
way.
Bounced over here.
Right.
We go over here. So this is a nice level, right? If you keep on going back, you realize you have to. It's not just pre-market, bad days pre-market. It's usually a couple of more touch points before that you're looking at as well.
Okay.
That pre-market level is just an indication that, hey, something happened over here. Go back and take a look as well. That's what I try to look at.
You see what I'm saying? Even on that one, it's like every move, the pre-market, it's going down. As soon as market opens, you have that huge green candle.
Yep. That's why we.
And then it's yes.
You're right.
It's the opposite. Like if you go back a day or two, you see it going up, and then as soon as the market opens, it's like a huge, or even a few minutes after, just like it just goes right there. That's a perfect one.
Yep.
It goes down what?
You're absolutely
huge
right.
amount.
But if you look at it, this is funny, right? Like I drew this the other day, right? This was like a perfect channel down. So even though we moved up in pre-market over here, we kept on getting rejected of this similar area all the way through. So you kind of have to sometimes look at, zoom out a little bit, go back. But yes, those how the market, like you could get 8:30 news, it could react one way, but you don't really know how the market really anticipates or really like digests the news till that 9:30 volume comes in. It is very different how it happens. And I honestly have no idea why it is. Is it a fake? Is it not to give an indication how the market's going to run? Is it, not for retail? I don't know what it is. But I realized...
That's the other reason for my question earlier in the zone about straddling. Because, I mean, it seems like at market open, if you take both sides real quick, you have a great move just about every market open. So, I mean, say instead of going $2 out, you go $4 or $5 out for cheaper contracts, but you also have less to lose.
Yeah, so $4 or $5 is common these days. It's usually not a common thing overall. Realize that SPY usually moves like a 0.25%, maybe a 0.5% a day, right? Doesn't usually move more than that. Generally, when things are normal, these are very volatile days, right now. So you have to keep that in mind. Two, you have to be very good about cutting your put, or your opposite one, whatever your loser is, very fast. Like you have to be careful about cutting it out as well. So if you can manage those things, that is fine. But it's not some of those things that we have our bias with it, and most people aren't able to do that really fast. So it's just one of those things that you will always be losing money somewhere, right? So you'll always be trying to save your ass somewhere, rather than wait a little bit, get that direction, and then trade that direction.
Okay.
That is all.
Okay. All right. Thank you so much, man. I really appreciate your answers and everything, man.
You're welcome.
Thank you.
And this is one last question.
Yes.
So will that strategy work on Wednesday, because Powell is talking and we can...
Do not trade news like that. Do not do that
Okay.
because it can whipsaw so hard. This is.
Mm-hmm.
Let me show you.
Mm-hmm.
Where was this? Look at this news.
Mm-hmm.
We went in one candle. We went from this was on the 12th, right? So this went from 560 to 566. It is a $6 move. This is like 1.5% almost move on SPY in one 5-minute candle.
Mm-hmm.
So you can get destroyed. Like one, obviously you can't trade this part, right? But if this happens on, at 2:30, you can get destroyed absolutely. On the other end, like you will go to zero so fast, it's not even funny, and it's very difficult to. Where will you take profits? Where do you know that you're going to take profits though? Like, sure, if you can put in like limit orders, sure, but this is you will make money, but you will also there's a sure shot that you will lose one of the contracts. And you'll realize it on Wednesday. Take a look at the contracts tomorrow for 0 day and take a look at contracts on Wednesday. You will realize that the prices of those similar dated contracts or similar out of the money contracts is going to be significantly higher because everybody wants to anticipate a move and get it. So your contracts are going to be insanely more expensive just because of that reason.
Oh, okay. That makes sense, yeah.
You're welcome. Don't trade the news. Just like it is just playing with fire. Like, there's like no, like the market is at every day. Every day it gives you a move. All you need, I'll be really honest with you, all you need is a 20% on your options. If you can consistently do that on $100, you will double your money every 5 days. Like every week you will double your money. 100 to 200, 200 to 400, 400 to 800. You will keep on doubling your money really fast. You only need 20% a day. Trust me, it seems really small, but once you hit 1,000, you only need, like 10 weeks like that to move from 1,000 to like 100 and I don't know something $28,000 or whatever. Like in 10 weeks you can multiply. So it's not it's consistency that will always get you ahead rather than big moves. Always. Like you can ask any successful trader, you can go out to any other Discord, you can go wherever you go. Consistency will get you further than big moves. Always.
Yep, got it, yeah.
Because you can take $100 loss, right? If you got a put and you took $100 loss, but what happens when you start trading with $5,000? Or what happens when you start trading with $15,000, right? Those risk management never changes, right? Like your portfolio being small doesn't change the fact that actually when your portfolio gets bigger, you will actually take less risk. You will probably be okay with 5% because on 100,000, if you're investing, for example, 10,000 on an option, right? 5% is a lot of money at that point, right? Like you can easily make a lot of money with that compared to when you're investing $500. Your risk significantly changes. So always save your money. Go with consistent gains rather than big gains.
Got it. That makes sense. That kind of build that habit with less money.
Yeah. That last contract, if you were going in with, for example, I'm going to cheat thing, whatever you're going on. If you have 3 contracts, right? Last one, sure, aim for 100%. Doesn't matter. But the first 2 should be enough that you got out all of your money that you put in and a little bit of money on it, right? Like, you should not be worried that, hey, if this contract, something happens to it, I would lose money. Like, that should never be an aim. That should never be a worry, let me put it this way.
Okay, yep. That makes sense. Thank you.
Yeah, I really like that. That makes a lot of sense. Thank you.
You're welcome.